all I have to do is use the 12-month numbers from here, from the 10K, minus the 9-month numbers from 10Q. Oops, I meant to say all Did I do that correctly? Probably not. Let me see. Minus the 9-month numbers. Oh, because I used incorrect date. I want the number from end of September to end of December 2022. Okay. Now it makes sense. Still, apparently they had a higher operating margin for that quarter. I'll just leave it as it is. But to make comparisons over time, you basically need to build this quarterly time series, then you make comparisons. And typically it doesn't make sense to compare a December quarter to a September quarter, because firms have seasonalities in their sales, okay? And they don't necessarily have, again, this number is too big. I'm missing something. Okay, 408. And, oh. You guys tell me where I'm making a mistake. Just look at that formula and tell me where I'm making a mistake. The reference to number from 10K is an absolute reference but I copy and pasted that formula. I don't want to do that. I need to make that into a relative reference. So hit F4. Okay, now it makes sense. Okay. And I can do the same thing here. Just all of it. I don't know why that number is negative. Anyway, I don't have to worry about that, because they may not have the same. 24.25. Oh. In this case, unfortunately, units are different. In the 10Q, units are the actual number of shares. In 10K, the units are in thousands. That's what I'm saying about there is no standard. You have to pay attention to these details. Okay. Doesn't even say it, but this is definitely in thousands. Okay. Anyway, let's continue talking about it. The expenses that you make after the cost of revenue are called first operating expenses. These are expenses that you need to make even if you had no sales. Obviously, you have sales and marketing costs. Even if you didn't sell anything, you had to advertise, you had to let your salespeople do sales trip, take the clients out to lunch, dinners, spend money. That's fine. This research and development, it's kind of a catch-all number, but you kind of need to be careful. Some of the expenses are actually put under research and development. Most important one is cost of employee stock options. Until 2006, when you granted a stock option to an employee, there was no requirement to expense it. You could if you chose to do so, or you could simply make a note of it in the notes. Starting 2006, I think it was FASB 123R. If you're interested in accounting stuff, you need to read that. And if you were doing a valuation class, which I may end up teaching next fall, we would actually cover that. It basically brought a requirement that says if you granted an option to an employee, you need to estimate a value for that. For example, using something like Black-Scholes. And suppose you said these options are worth $30 million. And you look at the vesting periods, more often than not, vesting period is 3 years, even though these are typically 10-year options. The idea behind those options, you compensated your employees. Instead of giving them cash or shares, you gave them options. But those options have a value. But since they're not allowed to use these options over the next 3 years or during the vesting period, this is effectively compensation for the services they will give you over the next 3 years. So you need to write off the value of that option over the vesting period. So the first year, you're going to write off 1/3. Or if you're doing it quarterly, that's 12 quarters. What's 1/12 of 30 million? Well, that would be 2.5 million, right? So you're going to write 2.5 million this quarter, another 2.5 million next quarter, and so on and so forth. If you look at these income statements, they're typically under those, because, what are you paying these guys for, okay? You're paying them for the things they're going to do for your company. And we can actually figure out how much of that is stock-based compensation. But if that number is really big, that's because of that. For example, let's look at the 10K. Recognize switch. They're talking about in 2022, almost 360 million. It was over 560 million in 2020. Some of that could be genuine R&D costs. After all, this is a company that develops software, right? So there is actually an R&D component there, but not necessarily all of that is actual R&D. So don't view this as, oh, they spend a lot of money on R&D. Maybe it is true, maybe it's not. And we'll kind of get into that. General and administrative, it's